stocks? You mentioned sectors that have contributed so much to the growth of the equities market in 2024. What about stocks? Which one had the most impact?
Well, if you're talking of the ones with the highest gain and the highest loss are the what they call the leaders and the laggards. You saw the insurance industry; some of their counters were quite strong. You saw Oando was among one of the leaders in the market in terms of market gain. Oando gained over 500% last year. You talk of the likes of, like I said, the number of insurance companies did quite well in terms of market gain. Then if you talk of the laggards, you talk of the likes of Ray Power and a couple of them that lag behind, but Northern Flour Mills also lag behind. But the basic thing is that you have market leaders in terms of appreciation across a number of sectors. The oil and gas sector was among them, the insurance sector among them, even some stock that used to be penny stocks recorded very significant gain last year.
Okay, well, in terms of macroeconomic policies, how much do you think has impacted in the market?
Well, if you look at macroeconomic policies, so you're looking at inflation policies at relates to inflation, driving inflation or moderating inflation, interest rates, exchange rates. One would say that what ordinarily should have impacted the equities market negatively, which is the interest rate policy of the central bank, interestingly, did not so much affect the market. Like I said earlier, when you have high interest rate environment, what happens, investors will underweight their portfolios in equities and move to fixed income. But interestingly, the equity market is the one that actually outperformed inflation because people want to have some assurance. I did say earlier that the equities market gained about 37.65% last year. Contrary, I mean, if you compare that to an inflation rate as in November of 34.6%, the equity market, anybody who invested in a basket of equities actually outperformed the market. But I think the other factors beyond monetary policies are the factor that drove performance of the market, because ordinarily the monetary policies should have dampened equity market performance in 2024.